So what's more nerve-wracking than waiting for your first date to text you back? For Wall Street, it's waiting for today's PCE inflation data. One wrong number and the markets could ghost rate cut hopes faster than you can say Powell pivot. So before you place your next trade, watch this. Good morning. I'm Francois, your market analyst here at ATFX Africa, and welcome to today's daily market brief. We've got a packed session lined up for you with a special spotlight on the Fed's favorite inflation gauge, the PCE, plus fresh moves in GBP USD, gold, and the FTSE 100. So stick around because today's data could be the market plot twist of the month. So let's kick things off by talking PCE, the Fed's golden child of inflation measures. Forget CPI. The PCE is statistic Powell actually lurks under his pillow at night. The PCE index is the widely regarded as the gold standard for measuring US inflation. Unlike the CPI or the Consumer Price Index, which captures more headline-driven moves, it's items like food and energy. PCE accounts for a broader range of household spending, making it the Fed's preferred measure. Importantly, the Fed's 2% inflation target is explicitly tied to the PCE and not CPI and PPI. Measuring every release is, well, closely scrutinized by policymakers and traders alike. The particular report arrives just days after the Federal Reserve delivered its first rate cut of the year, a quarter-point move that reduced the target range to 4 to 4.25%. The cut was, well, framed as a cautious adjustment designed to support a cooling labor market, not the beginning of a more aggressive easing cycle. However, recent data complicates the picture. US GDP was revised upward to 3.8% in the second quarter, making the strongest pace in nearly 2 years. Growth of this magnitude paired with sticky inflation pressures leave the Fed in a challenging position. Cut too quickly and the risk reigniting inflation, or move too slowly and risk tightening financial conditions to the point of harming employment. For traders, the dollar will be the first instrument to react. A stronger than expected PCE print could support the greenback further, putting renewed pressure on risk assets such as equities and commodities. Conversely, a softer reading may weaken the dollar, providing upside momentum for gold and other temporary relief for currencies like the British pound. In short, today's number will be the pivot point for market direction heading into October. Let's kick things off with our first currency pair for today, the GBP USD, also known as the cable. Now, the pound has been acting like it had one too many British pints, tumbling to a 4-week low around 1.3325 before, well, bouncing slightly. The UK inflation remains at its highest or the highest in the G7 at 3.8%, with a possible peak at 4%. Meanwhile, the Bank of England's policymakers are split, some calling for patience, others pushing for more easing. And in political noise, like Manchester mayor calling for renationalization and heavy borrowing. And gilts aren't exactly winning popularity contests. Then throw in stronger US GDP revision and the dollar's been flexing its muscles at sterling's expense. Having a look at the chart, GBP USD trades below all major moving averages, which doesn't exactly, well, scream confidence. If it breaks the 1.332 handle, the next support sits around 1.3160. Upside resistance? Well, the 1.34 zone, which sterling recently failed to hold, and traders are clearly waiting to see today's PCE print before taking the next swing.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Moving over to gold, where we have seen, well, the bulls have had a wild ride from record highs near 3,790 to testing support at 3,740. Think of it like a roller coaster with, well, no seatbelts, only Fed speakers, and stronger US data trimmed dovish Fed best, boosting the dollar and weighing on gold. But it's not all bearish. Trump's fresh tariff threats, including 100% levies on branded drugs and 50% on kitchen cabinets, is keeping gold's safe haven glow alive. Traders are now glued to today's PCE release, which could either cement the Fed's cautious stance or revive hopes of more aggressive cuts. Having a look at the charts, gold is testing the 3,720 support zone. A decisive break could drag prices towards 3,680 and then 3,580. On the flip side, resistance sits at 3,760 with a breakout potential retesting the all-time high around 3,790. In short, the PCE will decide whether gold sparkles or slips. Then if we have a look across the pond, FTSE 100 slipped 0.4% yesterday. Picture it like a tug of war. AstraZeneca and HSBC pulling down, while miners like Rio Tinto and Glencore tried to lift it back up. Corporate headlines played their part. Convatec tumbled on US investigations while Halma upgraded revenue guidance. Politically, Andy Burnham nationalization talk added more uncertainty, but the real kicker came from the US, where stronger GDP data dampened Fed cut expectations, weighing on global risk sentiment. Having a look at the charts, the FTSE sits around 9,230, off at August's peak at 9,358. Post rests firmly at 9,190, while resistance looms at 9,290. If we break either side, momentum could start to accelerate. For now, it looks like the index is in wait-and-see mode, waiting for US data to set the tone. So here's the big question. Will today's PCE release confirm Powell's cautious cut or blow the door wide open for another surprise move in October? Well, tune in on Monday because we'll see how the market digests today's data and we'll discuss it from there on further to assist you with your setups starting the week ahead. And with that, we wrap up your daily market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking in the link in the description and go and experience the difference for yourself. It is until next time, stay sharp, stay focused, and trade smart.